So what's the big problem with wealth creation? How do people like us, who didn't inherit a boatload of money, who are investing and building wealth from our own blood, sweat and tears, how do we invest in a way that gives us remarkable results and become financially free before retirement age? I don't know about you, but I am sick of hearing from wealth gurus and experts who don't walk their own talk and prescribe strategies that are a one-size-fits-all approach. For self-made people like you and me, I'm here to tell you that you don't need to be superhuman or already wealthy to reach financial freedom earlier than 65. This is the Alternative Investing Podcast. Hey guys, welcome back to the podcast. In today's episode, I actually want to talk about building an epic board of advisors to support you on your wealth building journey. And when I say that, I like the expression of building almost like a Jedi Council of people who can help you navigate difficult decisions, help you identify great opportunities, and help you preserve and protect your wealth over time. Inside of my world, and especially inside of Freedom Warrior, we talk about the 4 pillars of great investing. And really how these 4 pillars have come to be is, having worked with and observed many, many investors over time, I've been able to kind of glean what I would call their blind spots. So sometimes, for example, someone would come to see me, they would have a great income, a reasonable portfolio of investments. They certainly care about money, and yet they were struggling to get traction. And I started to diagnose where I thought those issues were. And I realized I could almost categorize them into 4 buckets, which is where these 4 pillars came from. The first was around stewardship. So although someone might earn great income, were they actually any good at caring and managing that flow of income once it came into their world? So for example, a lot of business owners are really, really good at managing money down to the cent inside their business. The minute the money gets paid to them, either as a wage or a dividend, it's whatever, and it becomes more complex, obviously, because you've got partners and spouses and kids and other people that might want a piece of that income. And so therefore your control or your capacity to control is diminished. Obviously as well, life and lifestyle pressures can mean that management of that money can be tougher. And I'm certainly not advocating that you need to have a strict budget. But there are certainly principles around stewardship and the care of that money that is really, really important. So stewardship from my perspective is the management, the control and the diligence around that money. The second pillar, which is probably one that I think a lot of business owners really struggle with, is what I would call investment effectiveness. So in this pillar, really what I'm saying is, how good are you at asset selection? How good are you at managing those investments? Are you selecting investments where there's alignment with your goals? And are you tapped into the right network to kind of access good opportunities consistently? Again, like what I see is wealthy people who for some reason have maybe become influenced by their peers or other people's opinions, and they don't have the time or the energy to figure it out, ending up in a situation where they buy or invest in substandard investments. So, for the income they've earned, maybe their, result is fairly disappointing, and maybe that then compounds their understanding of or enthusiasm for continuing to invest. If you don't get a great result, why would you keep putting money into it? And so then a lot of those people then go, well, the highest return on investment is in my business, so let me keep putting money there. The third pillar or blind spot that I see for a lot of people is actually what I think of as mindset. Maybe they lack ambition, or maybe the ambition isn't quite in alignment with the income and capacity that they have. Maybe they lack urgency. So this is typical for a lot of business owners, is they have great urgency around building the income in the business, but no great urgency into converting it into wealth. It falls on the back burner. It becomes a someday I'll get to that type issue. The third one that I would talk about is clarity of goals. When people don't have that clarity of goals, in terms of their thinking. It's very hard to make sure that your investment selection is in alignment with those goals. And then beliefs, like the way that we're brought up, the experiences that we have, what we make money mean, can have a huge impact on our mindset. And, I've worked with a lot of people who, by anybody's standard, would be described as high net worth, and they don't feel it. They don't believe it. They feel poor. And so that is, again, something that can really cripple decision-making and outcomes for a lot of people. The fourth pillar that I see a lot of people have weakness around is what I call knowledge. And that can mean both formal and informal education. It's about your thirst for new information, for new ideas. And what comes with knowledge is, some level of wisdom or discernment. So, some people might call that gut feel, their capacity to, look at numbers, see deals for what they are. But that capacity to discern a good deal from a bad deal is really, really, really important. And so, I guess that's where I wanted to start today, is just to say that if you kind of have in your mind that those are the four pillars that you want to be mindful of in terms of looking for your own blind spots and being really frank about, where do you think your own weaknesses lie? And I'm constantly looking at that. Do I invest in all four of those pillars in terms of growing my awareness and knowledge around wealth building? The sorts of questions that I encourage my clients to consider, and there's four of these as well, is number one, do I know the outcome I want? The second one is, do I have the right assets or investments to get me there? The third one is, do I have a high degree of control over my outcome? Most people will categorically say no. And then the fourth question, which is really where today's podcast is really taking us, is who's on my team that can educate, hold me accountable, encourage and advise me? And that's really kind of what I wanted to talk about today. I definitely feel we can glean a lot of lessons by looking at what it is that the ultra wealthy do. And I've certainly learnt a lot by spending time with people who, even if they tried to spend all their money, probably couldn't and will have money for generations to come. So I thought what would be really useful today is to talk about this model of the family office and what that looks like. If we consider how rich families utilize the concept of the family office, I think we can learn a lot. And it's not necessarily that, there's a lot of people who are wealthy who don't need a family office, but if they can adopt some of these ideas, they could certainly go a long way to not only preserving their capital, but finding better opportunities and growing their wealth over time. The core purpose of the family office is really to create a wealth strategy, an integrated wealth strategy, and to almost have a coordinated approach to the wealth transfer. So that would include tax planning, investment considerations, and one of the key roles of a family office, in the way that really ultra wealthy families talk about them, is to be an integrator of financial strategies. The concept was created initially to specifically look after the wealth of super high net worth families. But the modern day family office does way more than that. Depending on who you are and what your objectives are, sometimes a family office can have everything from the accountants, the lawyers, the advisors. It can almost be a full board of directors to help you run the family business and beyond. So there are two principal models that have emerged. One is the single family office and the other one is the multi-family office, meaning, they look after many families versus one office and one family. There are some key considerations that I'd like to share, which I think are maybe common amongst most of these. The first one is education. So one of the key roles of a good family office is to educate and mentor, the wider family, so that, what you're doing is you are constantly preparing every generation to be responsible stewards through formal and informal initiatives. And I think that's a really important one that people don't recognize. So if you are someone who aspires to creating intergenerational wealth, and then that would be something that I would say is really important. And how that could show up is conversations in the family, specific family retreats, and alike. The second consideration is financial security for owners. So, financial security means different things to different people. So the goal of a lot of family offices is to make sure that members can continue to pursue, their lifestyles while optimizing the wealth transfer for future generations. So a good family office is not trying to sell every member of the family on being an entrepreneur or, earning high income. It's about giving the members of your family the freedom to be themselves in the context of understanding that there's care and responsibility around being an inheritor or a participant in the wealth. The third element here is, family offices are structured in a way to protect the privacy and security of financial information. And, continuity, the family office really serves as a partner for the owners in sustaining and making their assets work. So all of those factors combined, customizing financial services, educational offerings, all those things are just really useful ideas to think about when you're thinking about building your own board of advisors. Because really what we ultimately want is we want to create a series of people around us who can not only help us access great opportunities, help us educate members of our family, help us navigate economic turbulence, and help us grow our wealth. And frankly, it's very hard to get that in one person. And unfortunately, I think what a lot of wealth practitioners and professionals do these days is they try to paint themselves as the one-stop shop. And, for various reasons, including independence, it's really important that you are looking beyond the wisdom of one person or one firm to help you grow your wealth. The final point that I will make about this idea of building a, Jedi Council level of advisors is that it's really important to recognize that you need to have the right advisor for the right season. So if you're someone starting out, you're not necessarily going to go out there and find the Rolls-Royce advisor. If you are someone who is further along in their journey, or maybe you have a shorter timeline or a runway to wanting to be financially free or retired, then maybe you do have to spend the money to go and work with someone who will help you get the result you want. But the season that you're in, and I encourage anyone who hasn't already, go and listen to my podcast. I'll make sure it's in the show notes, where I talk about the 4 seasons of investing, and recognize that, sometimes you are going to outgrow your advisors. And I see this all the time, and I'll talk about one specific area, which is accountants. There are a lot of accountants out there, and there is a huge discrepancy in my world between your entry-level H&R Block accountant all the way through to those accountants who can offer strategic and tactical advice, which is, in alignment with the size of your business. You want to be really clear when you outgrow someone. I'm a loyalist at heart, and I've found that a really difficult thing to kind of navigate over time, which is that sometimes I've been with an accountant or an advisor, and I recognize that I'm not getting the cutting edge advice that I need to get me to that next level. And so, this idea of advisors and seasons is really, really important. The final comment that I will make, which I hope is helpful to you, is this idea of advisors and a skill matrix. One of the things I've found over time is, particularly if you are less experienced in the game of wealth building, it's easy to lump advisors into the same bucket. And when I say that, what I mean is it's very easy to be fooled into thinking that someone is in fact the one-stop shop. But I've created this thing that I call a knowledge matrix, which is, down one axis, I'm talking about what are all the skill sets I need. I need to know about wealth management. I need to know about tax. I need to know about structuring, estate planning. I need to know about property management, all sorts of aspects of wealth building. And then across the top, I'm like, well, who are all the professionals that, are affiliated with the wealth world? And there's conveyancers and accountants and financial planners and brokers and buyers agents and all sorts of property advisors, property managers. And I'm very clear on, when you start to kind of use that matrix to figure out, well, who has what skills, there are a lot of people who don't have ticks against every single one of those and yet claim that they are experts in all of those areas. I'll talk now a little bit about financial planners. Do financial planners, for example, know about wealth? Yes. Do they know about money management? Sometimes, ? Do they know about how to evaluate a good from a bad deal in property? I would say majority no. Do they know about structuring? I would say ? Probably not. Estate planning ? So my point is that every profession has their area of experience, and it's really important that as an investor that you become educated around this. So I do have a document called the Knowledge Matrix, which I've created for myself, and I'm happy to share that with anyone who's interested. Just flick me an email if you want a copy. You can reach me at Salena, Salena, at incosiwealth.com. And just let me know that you're after my knowledge matrix and I'll flick you a copy. This idea of building a board of advisors to support you on your wealth journey is critical. I've certainly seen where people try to go it alone and just pull in people as advisors as and when they need it. And I think you can do that earlier in your journey. But as I said, as you get closer to the finish line, not only are you trying to build wealth, but you're trying to focus on preservation. And you want to understand, number one, the limitations of your own skill set. And number two, you want to understand how rich and valuable advice, support, having a sounding board can be when you're talking about creating wealth that endures. So if you have aspirations around being a resilient investor that can really see yourself through lots of market cycles, lots of economic turbulence, lots of life events that, maybe you hadn't expected, then this idea of building a board of advisors is crucial. Anyway, guys, I hope you found that really useful. Please get in touch if you want some ideas or support on this. But in the meantime, take care, and I look forward to catching up with you soon. You've been listening to the Alternative Investing Podcast. If you're feeling frustrated that despite doing everything right in the property investing playbook and you're no closer to financial freedom, then head on over to incosiwealth.com to learn more about how you can use alternative investments to catapult your investing income and blend strategies to shave decades off your timeline to financial freedom. See you on the next episode.